We're about to dive into one of the most powerful, most misunderstood, and honestly, most dangerous inventions in all of human history. This is a story of epic booms and catastrophic busts, of freedom and of slavery. It's a story of incredible creation and total destruction. We're talking, of course, about the ascent of money.
So, this quote, it's a heavy one, right? John Maynard Keynes pointed it out for a reason. It gets you thinking. Money isn't just about buying stuff. It's the foundation of everything, the very basis of our society. And if that foundation starts to crack, well, everything we've built, it could all just come crashing down.
So that brings us to a huge question. What if we've been looking at money all wrong? Seriously, what if it's not just a coin in your pocket, but something more, like a force of nature, a power we unleashed on the world and on ourselves, a power that magnifies everything about us, our genius, yeah, but also our madness. That's the journey we're taking today.
All right, so where does a story like this even begin? It begins at the exact moment humanity finally understood this power, not as a chunk of metal, but as an idea, a simple promise that was about to change the world forever.
Okay, picture this scene. It's a total clash of worlds. When Pizarro and his conquistadors show up in Peru, the Incas are just completely baffled. They can't understand this obsessive, almost insane lust for gold and silver. I mean, to the Incas, these metals were beautiful, sure, even sacred, but that's it. For the Europeans, though, it was something else entirely. It was an abstract concept. It was money. It was portable power, a claim on anything, anywhere, anytime in the future. You see, this wasn't just a battle of swords and armor. It was a battle of ideas.
And that really gets to the core of what money is, you know? It's not about the stuff itself. It doesn't matter if it's a piece of silver, an old clay tablet, or just a line of code on a server. Money is a technology. That's the key. It's a system built completely on trust, a shared belief, a promise that this little token will be accepted by someone else, somewhere else, at some point in the future.
But here's the thing. The moment you invent a way to trade value across time, you accidentally create its shadow, something darker, something way more complicated. Yeah, I'm talking about debt.
Think about Shylock from Shakespeare's The Merchant of Venice. He's like the perfect symbol for this whole mess, right? The story shows just how much power lenders can have, especially when nobody else is willing to lend. But it also shows how fragile that power is. Shylock, an outsider, lends money to the powerful majority, and in the end, they turn on him and crush him. It all boils down to one fundamental, kind of scary question that our whole financial world is built on. Why do we pay our debts, especially when we owe money to people we can't stand?
And don't think for a second that this is just some old story from a dusty book. Nope. This dynamic, the powerful lender and the desperate borrower, it's happening right now all over the world. We're talking loan sharks from East Africa, all the way to the housing projects of Glasgow. Debt's power, both seductive and incredibly dangerous, is as real today as it ever was.
So what happens when you take the abstract power of money and you mix it with the raw, chaotic emotions of a crowd? You get an explosion. You get a financial bubble.
Let me introduce you to a guy named John Law. This dude was, a brilliant Scottish financier, but also a total gambler. And for a short, absolutely insane period of time, he basically controlled the entire economy of France. He created this thing called the Mississippi Company, promising everyone they'd get rich from the colonies in America. He starts printing paper money to fuel it, and suddenly Paris is gripped by this speculative mania. I mean, everyone is buying in, prices are shooting through the roof, and then, poof. The trust, that shared promise, it just evaporated. The bubble burst, thousands were ruined, and humanity got its first real lesson in how our collective greed can lead to our collective ruin. And here comes Keynes again, hitting the nail on the head. He basically said, look, markets aren't these perfect, rational machines. A lot of the time, they're driven by what he famously called animal spirits. You know, those wild swings between optimism and pessimism that we all feel. So the stock market? It's not a calculator. It's more like a giant casino, a psychological battlefield reflecting all our hopes, our fears, and yeah, a lot of the time, our delusions.
And it's kind of crazy, right? The lessons from these bubbles are just as real today as they were 300 years ago. It's a reminder of the wild roller coaster we're all riding. And hey, if you feel like this story is important, if it's helping you connect the dots, maybe take a second to like this explainer and share it with someone you think needs to hear this. Because helping each other see these patterns, that's more crucial now than ever before.
Okay, so after getting knocked down by crisis after crisis, humanity finally started to fight back.
We started inventing tools, not just to make more money, but to manage the terrifying, unpredictable risks that came with it. You know, those totally unexpected, game-changing events we call black swans today?
And you'll never guess where one of our most powerful tools against risk was born. It wasn't some high-tech trading floor on Wall Street. It was a churchyard in Scotland. Seriously. Back in the 1740s, a couple of ministers had a very real, very human problem. What happens to our wives and kids when we die? So they used math, the new science of probability, to figure it out. They created a fund where everyone paid a little bit in so they could guarantee a big payout for the unlucky few whose number came up early. They basically took the logic of gambling and flipped it, turning it into a science of protection.
And that one simple idea, let's pool our risk together, it just exploded. It scaled up and up until it became the foundation for the modern welfare state, which, when you think about it, is really just a gigantic nationwide insurance plan. It's there to protect all of us from the financial catastrophes of getting old, getting sick, or losing a job.
Fast forward to today, and this whole system has morphed into something else. It's a single global machine, a leviathan really, incredibly complex, interconnected, and unbelievably powerful. For the past few decades, this global machine has been running on a really strange engine. Some people call it Chimerica. Think of it like a codependent relationship on a global scale. You had China, the world's biggest saver, and America, the world's biggest spender. China was lending trillions of dollars to the US. What did that do? It pushed interest rates down to rock-bottom levels, which in turn fueled a borrowing spree of historic proportions. We're talking everything from home mortgages to massive corporate deals.
And this massive global flow of cash, it had some absolutely staggering consequences. It supercharged the entire financial industry and created a wealth gap that was just mind-blowing. Let's put it in perspective. In 2007, right before the whole thing came crashing down, the CEO of Goldman Sachs made about 2,000 times more than the average American. The rewards from this giant global game were getting funneled to a tiny, tiny group at the very top, and that's a dangerous place to be.
So, after all that, where are we now? After all the bubbles, the devastating busts, the massive bailouts, what have we actually learned? What do we really understand about this incredible, terrifying force that we ourselves created?
You know, maybe the deepest lesson of all is this one. The financial system isn't some evil alien machine that's been forced upon us. It's a mirror. That's all it is. And it reflects who we are as human beings. It shows our incredible ingenuity, our ability to cooperate, but it also reflects our greed, our panic, and our bad habit of getting completely carried away. Finance just magnifies the flaws that were already inside us.
And when you look in that mirror, you see just how irrational we can be. There was this groundbreaking research by two psychologists, Kahneman and Tversky, and they discovered something fascinating about us. We don't handle risk logically at all. It turns out, when we're in a position to gain something, we become really cautious. We'll take the sure thing. But the moment we're faced with a loss, we turn into reckless gamblers. We'll risk it all just for a chance to get back to zero. This weird, lopsided thinking, it helps explain so much. It's why we let bubbles get so out of control, and it's why we panic and sell at the bottom of a crash.
So the takeaway here is that finance is not some stable, predictable machine you can just learn the rules for. Not at all. It's more like a living ecosystem. The economist Joseph Schumpeter had the perfect name for it: creative destruction. It's this relentless, chaotic process where new ideas and technologies are constantly being born by destroying the old ones. Yeah, it's messy, it's unstable, but that chaos, that's also the engine that drives all of human progress.
Because in the end, the Ascent of Money, it's our story. It's a story of humanity. It's this constant internal battle between the logical part of our brain and the emotional part, between our desperate need for security and our undeniable hunger for risk. This system, it's never going to stop. It will keep evolving, keep creating, and keep destroying. The ascent never ends. So the only question that really matters is the one you have to ask yourself. Now that you see this power for what it is, what will you do with yours? Thanks for watching. Don't forget to subscribe to Animeconomy and check the link in the description to get the book.